Hey, everybody, it's Friday Variety Show. We're doing 5 for 5 news, and we're keeping it tight today because we're recording a little late, and we're just trying to practice some discipline. So up on deck today, we're going to talk about Amazon's Q1 earnings, Apple's Q1 earnings, technically their fiscal Q2, and the interesting pieces of news that drove both of their stock off of varying sized cliffs. Also, apparently China's leadership is going to slow down implementation of the tech regulations that were slowing down its gigantic industry. So that seems like a positive development for tech entrepreneurs in China. Airbnb is doubling down on its nomad workforce in a very intentional way. So we're going to give you the rundown on Brian Chesky's tweets about that. And Snap just expanded its hardware lineup with a super adorable thick-cut French toast drone. And then, of course, it wouldn't be Friday without OK Boomer. We've got Landon Campbell from Inside. All that is coming up right now.
This Week in Startups is brought to you by Gun.io, the simplest way for anyone to hire world-class developers, expertly vetted for you by senior engineers. Get $250 off your first hire at gun.io/twist. OurCrowd. OurCrowd helps you invest early in pre-IPO companies alongside professional VCs. If you're interested in investing, you can join OurCrowd for free at OurCrowd.com/twist. And Thorne. Thorne empowers people to take control of their long-term well-being with a proactive, science-based approach to health. Through a variety of at-home tests, Thorne teaches you about what your body needs and provides the right high-quality, certified nutritional supplements for you. To get started and take 10% off your first order, head to thorne.com/u/twist.
Hey, everybody. Welcome to Friday's show. It's 5 for 5 for Fridays, where we do 5 minutes on 5 important stories. What's up first, Molly?
And we are sticking with our 5 minutes today. Damn it.
We're going to do it.
Earnings. I don't know if you saw that big cliff that Amazon stock fell off of yesterday, but that was a tall one. That was a half dome size cliff. Amazon reported Q1 2022 results. Net revenue was $116.4 billion, up 7% year over year. Decent growth, but not hyper growth. Operating income was $3.7 billion. That was down 58.4% year over year. Net loss was $3.8 billion compared with net income of $8.1 billion last year. Now, the big reason for this, and as we said when we looked at the last earnings, is that net loss was driven by the fact that they had to report a $7.6 billion loss on the Rivian investment. This is the Rivian cliff that we're seeing here.
Live by the gun, die by the gun. Live by the sword, die by the sword. I said Rivian was absurdly overvalued. The market eventually agreed. I said Amazon should have sold their entire stake as quick as possible, but that would probably not be allowed. They probably had a lockup. And so here they are. Giant markdown, I guess. I don't know if it's technically a loss because they didn't put that money in, but they had to mark down the value of that investment. This happened to Uber. This happens countless times. You have some investment that goes supernova, and then it comes back down to earth. I wonder if there was any drop off in the core delivery business, because I know the AWS business is still a juggernaut. Am I correct?
Booming. In fact, so much so that there was a tweet from Anshu Sharma saying they need to add a tracking stock on AWS as a standalone business unit, maybe even a full spin out and holding company. The two businesses are just very disparate. There was one analysis that suggested that if you take out the AWS earnings, that every other part of Amazon's business, namely, that giant retail operation, is effectively zero.
Yes.
Which is bonkers.
I think they run the e-commerce business for scale, and they are still in this model of let's just break even on it. Let's keep building out this infrastructure because it is still very early days for commerce. If you were to look at, put e-commerce aside, Amazon's total, market share in commerce is very low. In e-commerce in the United States, it's growing significantly, but they want to be a global player, and it requires this massive logistics. It requires them to have trucks driving around, planes, warehouses. It really is like maybe the third or fourth inning in that business. Yeah, even 20 years or so into that business. Then you look at the AWS business, man, it's a juggernaut. It's high margin. They're the leader. The profits accrue to the leader. And it's just a different style of business. I could see them being under massive pressure to spin AWS out without the founder, Jeff Bezos, running the company. There could be increasing pressure on this, but it's still a juggernaut of a business. And so is the commerce business. There's nothing that says they couldn't keep increasing the price of the commerce business, lose some growth, but have more margin. But why would you do that if Amazon Web Services prints money? I think their strategy is perfect. And
I agree.
The stock market will take care of itself over time. Company's not going anywhere.
100%.
Company's only going to get bigger.
Couldn't agree more. Buy the dip, but that's not investment advice.
Well, I mean, I would, if you're owning Amazon, I would be seriously not looking at quarter by quarter. I would be looking year over year, looking at each year, looking at their market share, and looking at the year over year growth. If you look at it that way and you start looking at it in a decade, arc, I think this is the kind of company that there's no world in which AWS is not the leader in 10 years, in my mind. And Amazon delivery and e-commerce is not delighting people massively. There's no instance, finishing my sentence, in which the e-commerce business is also not thriving massively. Any closing thoughts before we go to our next story?
No, not at all. Couldn't agree with you more.
All right.
Stay in that one.
Who's next?
All right. And then we got some Apple earnings. I don't even think we're going to need a full 5 minutes for this one. It's just a very interesting story of decent returns as usual with Apple. Total revenue up 9%, $97.2 billion.
What?
Net income is $25
Wait a second.
billion.
They're going to cross $100 billion revenue. That's bonkers.
I mean, they probably will, like next quarter.
Yeah.
Right? Like it's in.
I wonder if they did that. I wonder if they crossed that last quarter because of the holiday bump. Who knows? But I mean, wow.
I wonder.
$97 billion.
And you know how I'm always saying, like, they only care about selling iPhones and then Apple fanboys get all mad at me?
Yes.
Here's why they only care about selling iPhones. Because the iPhone revenue was $50 billion of their $97 billion total.
Oofa. That's an oofa.
$50 billion. The Mac, $10.4 billion. Services, $19.8 billion. I mean,
that's impressive.
Is impressive. That's a big turnaround for that services business.
That service business is growing. Yum, yum.
The stock
services, for people who don't know, the App Store, iCloud, music, news,
fitness,
arcade,
TV,
Apple TV. Yeah, not sure.
But I feel like the story that slipped under the rug completely was the part where Apple started bundling that all into one subscription, which is absolute genius. Like I got this pop-up one day that was like, hey, you're spending like $28 on various subscriptions, but if you make it $29, you get everything. I'm like,
what's the name of that? Apple One or something? What's the Apple bundle called? I don't even know. They're so bad.
Air Bundle
One. It's called
Plus.
Apple One Price, 6 services. And I have the family plan of it. So Apple One gets you music, TV, arcade, which is pretty great with kids. Apple Fitness, which I'm never going to use. But I guess there's some videos and some.
It does have good Aisha Curry. She's got this arm workout that'll make you want to kill her. It's just so mean. It's brutal.
Shout out Aisha.
I know. She's got a bunch of videos on there. I love them.
Partner of my guy, Steph Curry.
Your
the famous dad at Game 5. My bestie. Apple, not my bestie, but we know each other. Apple News and iCloud. And I got that 2 terabyte iCloud. And what I love about Apple One, I think everybody should get it. I predicted this on CNBC years ago, is like the family plan. So I have it as a family plan and I have the Premier with 2 terabytes and it costs me $30 a month, $360, but I have 5 people on it.
Oh,
so divide 360 by 5. It's pretty damn reasonable. It's like $60 a year or something.
See, I'm such a dum-dum that I'm paying for Premiere and didn't even know like my kid could be on it. Okay. I got to get my shit together.
Dummy.
Good to know. Good to know. But the other thing that's interesting about the Apple earnings that has the stock down almost 2% as of midday Friday is that Apple didn't really give very much guidance. They're doing this fun new thing that's very Apple-esque where they're like, oh, I just want to talk about it. So they didn't give a lot of guidance, which has investors freaked. And for like the 4th quarter in a row, they brought up supply chain issues. And so all these analysts are like, wow, if Apple is having this much recurring supply chain issue, maybe it really is a problem.
Pretty amazing when you think about this tremendous performance and the PE ratio 26. So Microsoft was 30. I think Google was 20 and Facebook, Meta 12.5 as we look at these price earning ratios. So pretty fully valued, but a juggernaut of a business. And I think, it's like one of these companies that, again, in 10 years, can you picture a world in which Apple doesn't play a wider, bigger part in our lives? And when I look at it, I can't imagine Amazon, Microsoft, Google, or Apple not playing a bigger role in our lives. I could absolutely see Facebook playing a much less role in our lives. So I always look at that. And that to me is always my guiding principle.
Yep, 100%.
Amazon PE 59? Yeah, I think that's what happens when you don't try to make money.
Right.
And you try to build the top line.
When you just make investors wait, which is what Amazon has always done. Works like a charm.
Be patient or don't buy the stock.
Yep.
Hiring software engineers can take a really long time, don't I know it? Sometimes it takes months, but Gun.io is going to change that for you right now. They're a developer hiring platform. They're super focused, and here's what makes them different. Their candidates are expertly vetted, and then they're matched to your company by a team of senior engineers, not by an algorithm or just a recruiter. Gun.io developers have 8+ years of experience building products, and they're comfortable working directly with founders and executive teams. They're going to get you candidates as quickly as 48 hours. Think about that. And the average time to hire is only 2 weeks. 90% of the candidates are US-based, and they have a network of vetted international candidates as well if you're looking to hire from other markets. There are 2 ways you can use Gun.io. Number 1, you could work with a freelancer and enjoy Gun.io's ongoing support services. They'll handle the billing and swap out talent for free at any time. Or you can hire a remote developer directly from the Gun.io network for half the typical recruiter's fee. So here's your call to action. Gun.io is the easiest way for startups to find and hire world-class developers. And you're going to get $250 off your first hire at gun.io/TWIST.
Well, so speaking of China impacts, because that is indeed what is constraining the iPhone production, apparently, onto our next story, China's leadership has realized that if you shoot yourself in the foot, you get a bad limp.
Yeah, you're not going to run a marathon when you shoot both your feet. In this case, shooting the feet means what?
In this case, shooting the feet means hamstringing its own tech industry with all of this intense regulation. So China's leadership has now decided, according to a report from the South China Morning Post, to slow down implementation of things like regulations that limit the amount of time that people can spend on internet apps. Apparently, the Chinese Politburo acknowledged the war in Ukraine and its intense COVID shutdowns and said, this could be a problem for our economy. And the South China Morning Post notes that a symposium involving Chinese big tech has been scheduled for next week to assure business leaders on the new direction, which is more policy support to reach the country's 5.5% growth target. So they're easing up. They're backing off the tech industry.
All right. So one of 2 things is going to happen here. They're going to get all the tech leaders together and they're all going to be taken to jail. And this is a total setup. Or I laugh because it's actually quite plausible.
Yeah.
Or now they're realizing that, holy cow, embracing capitalism and, their perverted free market where they're torturing people and have slave labor and don't let people read books. And if they do buy or read a book they're not supposed to, they go to re-education camps and lose 20 pounds on their spa menu and diet and torture. I'm being slightly facetious here, but, it's pretty serious stuff. And that maybe Jack Ma building huge companies is good for everybody. And the reason that they had one of the greatest runs in taking people out of poverty and increasing the standard of living was because of capitalism. And they're like, half of a, giant bear hug of capitalism. And then they decided, well, gosh, these entrepreneurs are too popular. And they're not as popular as Winnie the Pooh. So now, Xi Jinping doesn't feel as popular or loved.
Is that who you mean?
Yeah, that's what I mean. That's the kind of joke that they make about him because he looks like Winnie the Pooh.
Oh, he does kind of.
Yeah, it's cute. It's a charming nickname. But anyway, so maybe Jack Ma will come down from his mansion in Hong Kong
His
and
home
start
arrest,
going
you
back
mean?
to work and give up the oil painting to save the economy. But I mean, it's so dumb. They were making so much money taking these companies public.
Mhm.
The Chinese government was in on all these. They had this money printing machine, and then they were like, no,
It has too much power.
too many tall poppies, too much popularity. And now they're like, oh, well, you know what's going to happen is we gave people a taste. We gave people a taste, and then we took it away.
And entrepreneurs
This is not
started
how
leaving.
capitalism works.
Investors started leaving. And then when that was combined with the zero COVID policy, it's like the economy ground to a complete halt. But one other thing that's super interesting about this is the Chinese government realizing the power of the infrastructure that's been created. So they plan to repurpose some of that infrastructure, like Meituan, which runs one of China's biggest food delivery services, to get food to people during the zero COVID lockdowns.
All right. Well, this is I think this is in a way good news. The fact that China, our big rival and a threat to the freedom of humanity, the big existential threat I think humanity has is their expansion. Once you allow capitalism and freedom, you are going to learn a hard lesson. You cannot take it away from people. People want more freedom. And so you keep giving them this taste, and then you try to roll it back. You do it at your peril. And I think what they're realizing is, they could have a civil war inside that country. It's not out of the realm of possibility that there could be another Tiananmen Square protest. And listen, I know that was squashed. There could be more Hong Kong protests. I know that was squashed. But eventually, squashing your own people is maybe not as effective a technique as maybe just giving them a little more freedom.
Yeah.
So,
yep. It's an interesting development. All right. You only get to stay here for one more story.
What are we doing here?
I choose For Us, Airbnb.
Okay. I trust you
because
to choose well.
This is such an interesting story that we've been talking about for so long. So Airbnb is doubling down on the nomad workforce, which is, totally reasonable as the company that enabled the nomad workforce during the pandemic.
It's kind of on brand.
Almost belatedly when you think about it that way. Airbnb CEO Brian Chesky tweeted the following yesterday, Thursday. Today, we're announcing that Airbnb employees can live and work anywhere. Our design for working at Airbnb has 5 key features. 1, you can work from home or the office, whatever works best for you. You can move anywhere in the company and your compensation will not change. That's a big one. You have the flexibility to live and work in 170 countries for up to 90 days a year in each location.
Wow.
And then he says, we will meet up regularly for team gatherings. Most employees will connect in person every quarter for about a week at a time, and some more frequently. Love that plan. And then he says, to pull this off, we'll operate off of a multi-year roadmap with 2 major product releases a year, which will keep us working in a highly coordinated way. This last part is the one I find so interesting.
Yeah. So why do you find it super interesting?
I just think that the idea of actually altering your business strategy around your remote workforce in such an intentional way is so freaking smart, because it's an actual adaptation to this big change, instead of like everything will work just exactly how it has been, but you'll be at your house. Like, no.
So there's a lot to unpack here. Obviously, you pointed out right at the start that they are the enabler of this nomad culture, and they are also the beneficiary. So if they don't dog food this, then who's going to? And he does mention in his tweets to him that he sees this as a competitive advantage for getting talent. I happen to agree with that as well. And the other thing that's really significant here is the belief that coming together 4 times a year is critically important. And so I have taken the same approach. I am now telling people at my remote companies, Inside and Launch, be prepared to be somewhere 4 or 5 days, 4 times a year. And if you would like the freedom of being a work from home person, you have to have the responsibility of doing this. That means if you have kids or spouses or other responsibilities in the world, okay, you're going to need to have nannies or travel plans, or talk to your spouse about the fact I get to be home 48 weeks a year, but there will be 4 weeks a year where I will be traveling. Are we cool with that as a give and take between employers and employees? And I think it's actually going to be good for employees, because the one thing that's missing right now is mentorship, esprit de corps, the camaraderie.
And so
I do think it's going to put some people out. Listen, you have a kid, I have kids. We got to be away from our kids 4 times a year, 4 or 5 days. It's a bummer, but it's also kind of delightful that we get to be home and drive them to school, pick them up. If somebody gets sick, you can go to school and pick up your kids. Maybe you get to have a coffee break with them from 3 to 4 o'clock. And, just
wonderful.
Life is better for most people. It's wonderful.
Great to be in a hotel room away from them.
And it's also good to get those 5 days where you're like, crisp sheets and no kids waking me up and jumping on my head.
But no one needs me right now. No dog, no human. Like, great.
Yeah.
Love this.
And you're like, hey, spouse, take care of this. Hey,
no, I think it's so smart. I think it's, and I love the intentionality of this.
Yes.
Like, we've designed our workflow in this way. This is the plan for keeping that connection. Like, it's just this is a real leadership kind of Twitter memo here. I like it.
Conversely, there is a lot of abuse going on. And the extent of the abuse is unknown, but there are lots of people talking on the social networks about people taking 2 and 3 jobs at tech companies and working on side jobs and not doing work. And I think we're going to see that result in some reactions. I think one of the reactions, I'm curious your thoughts on this because I've been pitched on it at startup ideas or heard it, is people having some amount of, like, with their work computer, if they're going to work from home, knowing their status online and what they're doing. Now, this is big brother. But if people are going to be writing code or doing sales calls, like salespeople have their sales calls tracked, right? So this salesperson did 6 calls today. This person did no calls today. Well, with developers, I think we're going to see, or other people, writers, etc., people are abusing it to the extent that we're going to see tracking software on laptops. Many people probably have it on there already. Call centers have it on there already, where it's like, we need to know your keyboard's active. We don't need to necessarily know every keystroke, but we need to know what apps you're in for what number of hours a day and what work you're doing. I think if people are abusing this, it's going to result in that kind of reaction, and people just need to be aware of it, which is to say, don't abuse the privilege, people. Or else people are going to start activating tracking software, and there are people doing it already. And I think that's really it kind of sucks that somebody does this and abuses it, and then the other 9 people in the company have to, suffer for it in this big brother way. And if you're working at a big company, do not do anything on your corporate computer is my best advice. That is not business. Literally, have another laptop on your desk where you're doing your shopping or doing your stuff, because it's well within your employer's rights. We don't do this. I wouldn't do it. It's not my bag. I have other management techniques to do this kind of stuff, like looking at your actual work product. But I would not do anything on a work computer that is not actual work. It's just best advice, because if you're at Google or Apple or Amazon, I bet you with your work issued laptop, there might be some monitoring going on, and it will be increasing.
100%.
What do you think of that? Because people aren't talking about this.
100% agree. I mean, I think you should choose your company wisely. Because some companies are going to abuse that privilege also.
Exactly.
The simple fact is, we have all worked at companies where there was a slacker and we were all picking up for that slacker. So this isn't that much different, but there will be different enforcement mechanisms, and some will inevitably cross the line.
It's time for another OurCrowd deal of the week. Right now, you can join OurCrowd's investment in Sotero. According to the deal memo, Sotero has developed a patented new approach to data protection. This new technique eliminates the gaps of traditional methods by securing any data asset, whether it's on premises or in the cloud. And according to the deal memo, Sotero is trusted by one of the world's largest pharmaceutical companies. You can invest in Sotero at OurCrowd.com/twist today. And all over the world, companies like Sotero are innovating and driving returns for investors. OurCrowd analyzes many of these companies, and then they select the ones with the greatest growth potential, and they bring them to you. They invest from personalized medicine to robotics to cybersecurity, where companies spend $150 billion annually. OurCrowd identifies innovators so you can invest when growth potential is greatest, and that's early. If you're an accredited investor, you can join OurCrowd for free at OurCrowd.com/twist and review the current deals. That's OurCrowd.com/twist to sign up for free. Okay, last story is yours, Molly. I'll see everybody on Sunday and then Monday again for Big Monday. Great
Have a
week,
great
Molly.
weekend.
Thank you.
Bye-bye. Bye-bye.
Bye-bye.
Never gets old. All right, last story. Jason has a big name meeting right now, so I'm going to do this one by myself. Snap has just expanded its hardware lineup with a drone. Obviously, it has a camera in it. Snap launched its first flying drone camera called Pixy. It's available in the United States and France for $230. They call it pocket size, but I think that's only if you're rocking the cargo shorts in a 90s revival kind of way. It's a little more like purse or merce sized, but it operates without a controller. I'm assuming you use your phone to control it. It's available in the US and France already. And we have this 75-second video from CEO Evan Spiegel, where we're going to let him describe it. Hopefully you'll be able to hear it. And if you're watching the stream, you'll be able to see it as well.
World's friendliest flying camera. It's a pocket-sized, free-flying sidekick for adventures big and small. Everything you need to capture the spontaneity and fun of the moment from new perspectives is right in the palm of your hand. With the simple tap of a button, Pixy takes flight and joins you on your journey.
Boop, he's tapping the button, in case you don't see this. I mean, it is really small. It looks like a piece of toast, like a fat, like the kind of toast that people in San Francisco line up for. There it goes. It's following him. It's following him down the hallway. And then, oh, pretty good camera quality.
4 preset flight paths. Pixy floats, orbits, and follows wherever you lead. Pixy is ready to fly at a moment's notice. There are no controllers. There's no complex setup. Simply set a flight path and let Pixy take it from there, floating above you as it captures photos and videos.
Floating above you with a terrifying whine. And then it just landed in his hand.
And it knows when and where to return, landing gently in the palm of your hand.
Did we all know that Evan Spiegel was that awkward? I don't know why I didn't know that about him, but he's a little bit awkward. I'm not going to lie. This thing is awesome. And it is perfectly in line with Snap's aesthetic. You can't say they don't have an aesthetic. It's like bright yellow. Producer Rachel said she thought it looked like a McDonald's Happy Meal toy, which it kind of does. But honestly, this as like a content creation tool is fantastic. Snap said it's going to continue to invest in its AR glasses as well. They're just staying in the game when it comes to hardware and the social network that evidently all the kids actually are using. Even though most everybody in my cohort is like, wait, you still use Snap, or people still use Snap, but they do. And I could completely see this being a gigantic hit for all those like annoying beach influencers. I mean, I don't want it buzzing around me while I'm at the beach, but I know it's going to, and I kind of want to get one. And that's it. That is 5 for 5 Friday, everybody. We made it happen. I hope you have a great weekend. We'll be back here Monday for what I'm sure will be some god-awful dump of news because it never stops. That's why we're here for you. See you then. And it would not be a Friday show without everybody's favorite segment, OK Boomer. Rachel reporting. We're just having girl talk right now. Just you and me hanging out, talking about OK Boomer. Who do you have?
Awesome. On the show, I have a very familiar name this week, Landon Campbell from Inside. If you guys don't know who Landon is, I'm very surprised. He's probably the other notable Gen Z that works for Jason, other than Presh. Landon also has
other than Rachel.
Other than me as well. Landon has a really cool podcast called In Their 20s, and I talked to him a little bit about his podcasting journey. And then at the end, he gave some really awesome, tangible information for people that are interested in starting their own podcasts, like things going down to the basics, like what microphone that he thinks would be cool, everything like that. And then we did talk a little bit about what it's like working for Jason. I think you guys should listen to the show to hear what we have to say.
Oh, really? I mean, it's just us here.
All good stuff. Good stuff.
All good stuff.
Yeah,
that's hilarious. Definitely. And he also, by the way, like in case you want to have older person imposter syndrome, is in his 20s and an angel investor already at the Hustle Fund.
Yes, he is. He does talk about how he started investing and kind of the correlation between working in media and then also becoming an investor, long-term plans and things like that.
Fascinating. All right, cool. Thanks again for another great interview, Rachel. Landon Campbell from our very own, what do we call him? Sister company, Inside.
Inside. Yep. Awesome.
Okay, Boomer.
I understood the assignment.
Thank you so much, Landon Campbell, for coming on this segment of OK Boomer. I assume that everybody listening to this podcast already knows who you are because you also work for Jason. And I actually think that you're probably a bigger Gen Z working for Jason than I am. I definitely think you're killing it in the podcast space.
Well, I appreciate that, Rachel. Very excited to be on the show. This is going to be a lot of fun.
Yeah, definitely. So if for some reason, if you're living under a rock, Landon is the host of In Their 20s, which is an awesome podcast where he gets to speak to successful people about their 20s. There is an episode with Jason, which is kind of cool. He is also an executive at Inside, which is another thing that Jason does. He leads events at inside.com and he hosts the weekly Venturing in VC podcast. And then with all your spare time, you do angel investing with the Hustle Fund.
Yes. Yeah, that's a better description than I would have given. Everybody's always like, you're so busy, but I think there's so much synergy between the things I do, and I love what I do. So it doesn't really feel like I'm that busy ever.
I guess that leads into a good first question. How has working in the podcasting space prepared you for an investing position?
Of course. Yeah. So when I look at the podcasters landscape, I feel like there's kind of two routes you can take. And I know a lot of people that, are on the first, they're enjoying the podcast just for fun. They launch the show with friends, they talk about sports or other fun things. But I know a lot of people that intentionally created shows, to really run these as businesses. So they wanted these podcasts to be used as vehicles to get them into other industries, spaces. And for me, In Their 20s has always been that. Since day one of launching it, I always saw a lot of potential in the audio podcasting space to not just share stories, but also, get me in the room with a lot of these interesting people whom I would have never dreamt of being able to speak with. But then even further than that, my podcast has served as an awesome resource for deal flow. I've been able to have so many young founders on my show to really learn more about their companies, ask the questions that, you can kind of equate to due diligence when investing, and has opened up a lot of, unique opportunities. So if not for the podcast, I wouldn't have this cool job with Jason. I wouldn't have, opportunities to invest. So it's been a wonderful vehicle to, really get me into some cool new industries and sectors.
Yeah. Who would have thought that having a podcast that does well helps with deal flow? Never would have heard that before, right?
Yeah.
So Jason says all the time that he loves hiring young people. We're two of the young people that he has hired. What is it like working for somebody who has done just that? He's done so much in media, and it has definitely helped him have quite awesome investments along with him just being a very smart person. He's killed it in that space. How has it been learning under Jason?
Of course. Yeah. So I had Jason, I'll back up a little bit. I had Jason In Their 20s, episode 40. That episode did a lot for me, personally and professionally. I know Jason has that famous line, and it's even, in the background of, whenever we see him on camera, do the work. The interview was really focused on how he really grinded and did the work in his 20s, starting from nothing and really building such a strong network. He really, I believe the word he used was he networks at a preternatural level. So he was just so hungry to meet so many great people in his 20s, knowing that, meeting this person, meeting that person could lead to bigger and greater opportunities. But specifically, his journey professionally, I really enjoy working for him because I'm a big believer that in order to become successful, you need to see success. You need to see people whom have done something similar to that, that you're really interested in. And Jason was the OG and, really going from journalist with Silicon Alley Reporter to letting that be a vehicle to, open up other opportunities, as we just mentioned. He met so many other founders. He met so many great people, built relationships and trust through his media company, which then allowed him to invest in, and obviously everybody knows the Jake House story, but a lot of these awesome companies that he had an opportunity to invest in. So we see, the Harry Stebbings of today, the Packy McCormick's, us, really using these podcasts to get into bigger and greater opportunities. But if you think back, Jason was kind of the OG.
The first one. Totally.
Yep. Yeah. He saw the patterns between media and capital allocation. So it's a gift to be able to work for him.
Listen, if you're a high-performing founder or operator or human, you need to make sure you take care of your health and your wellness. A founder is one of the most stressful jobs you can have. You're taking care of a business, all the employees around you, and it can take a huge toll on your physical health. And that is where Thorne can help. Thorne is a health and tech company that offers at-home tests that can actually identify where you need the most care. Everything from a gut test that analyzes your gut microbiome. There's also a stress test that measures your stress hormone fluctuations. And these tests help get rid of guesswork around good health. They provide personalized steps for how to eat, how to exercise, and what supplements you should take. I hear you right now saying you think you don't have time for this, but you need to make time for this. Thorne also has a range of multivitamins and supplements that you can subscribe to. Again, this is personalized health and wellness, and Thorne is totally vertically integrated, so you're not dealing with anyone in the middle. To get started and take 10% off your first order, head to thorne.com/u. That's the letter U/twist. That's thorne.com/u/twist today to save 10%.
Definitely. I love personally as well the entire, I guess you'd call it a business model of doing something with media, networking, journalism, something like that, and then branching that into a fund. I think that is something that I would totally do in the future. We just did over on the This Week in Startups arm, and Landon works on the inside arm, which, like I said before, is something, it's just a different part of the many things that Jason does. We had our 2021 year in review, right? And they're like, what's your 5-year plan? And I'm like, thinking about it.
It's a tough question.
World domination is number 1, but number 2, is just really improving on the skills that Jason is just really, really good at, because, being able to work under somebody that was the first in this space is super duper cool. But for investing, you aren't investing at launch. You are investing over at the Hustle Fund. So what is the Hustle Fund?
Yeah, so the Hustle Fund is, and through the podcast, I met the founders, Eric and Elizabeth.
That's cool.
So I mean,
That's
again,
so cool.
Another perfect example. Yeah, but we focus on pre-seed SaaS products, and I'm a part of their Angel Squad cohort, so I get to invest alongside them, bring in deal flow as well, because of course, I have a lot of deal flow coming my way through the shows that I have. So it's a great opportunity for me to just build my network and be able to invest alongside, a really respected firm. And I've been with them now for, I think it's a month. I've obviously known Eric, had him on my show first last summer, but
That's awesome.
I've been working with them in the cohort for about a month. And then along with that, I do work with another VC called BVCC, the Black Venture Capital Consortium.
Amazing.
And that's kind of how I started to learn more about the venture landscape. And I've been able to invest alongside them. It's just, I think that the correlation between VC and media, some people are starting to understand it. We see the big firms like A16Z, they're hiring in-house. They're really investing a lot in their media that they put out. A lot of the small to mid-sized funds, maybe a lot of them aren't hiring in-house media, but they're outsourcing a lot. So I just feel like we're just scratching the surface for people really understanding how correlated the two are.
Yeah, 100%. So how, I guess, how were you able to unlock investing positions? How were you able to leverage that to people and be like, listen, just because I'm not somebody necessarily with this traditional finance background coming from podcasting, I'm still worth value. How were you able to pitch that to people to allow you to have these awesome opportunities?
Of course. Yeah. So something that I really try and showcase on my show, both shows, my VC focused show and even in their 20s, because, I really want it to be known through my brand that I am very interested in VC. I am investing. I just want to show people that there's no traditional way to break into VC anymore. You don't have to do the typical, IB background and, sometimes, operating I feel like for so long, there was specific, you need to do these steps in order to get into VC. So it's really my mission through storytelling to share stories of people whom broke into VC. Maybe they were athletes first, or maybe they were journalists first, or maybe they were actors and they found a unique way to get into the VC space. So bottom line, that's something that I'm really working hard to showcase on my show. To specifically answer your question, I think that the biggest thing that we need to really increase is access to information. So I enjoy, following a lot of great people on Twitter that are sharing their own personal experiences, information, resources that they used to get into this space. Because again, in order to become successful, you need to see success. You need to really see these unique playbooks. You need to see what people did to enter this unique space or this industry. And without that, with it being so gatekept for so long, people want to know how to break in. So I'm really trying my best to share my experiences daily, weekly, my conversations with VCs, different perspectives of, very famous investors in order just to give people the tools they need to succeed.
Awesome. So your show is a lot, like you said, there's like these really famous investors. Do you have any recommendations for content that people can consume that deals with people that are just starting off in their venture career, or maybe people that aren't as far along that are more? So I think, like, for example, sometimes it's really difficult for me to see somebody that is absolutely just killing it in their career. They're a lot older, they're at a different stage of life than me, and me being like, yeah, this is like a replicable thing I can do, because it feels so distant. Do you know anybody or have any resources that feel a little bit more tangible and like a little bit earlier on in their career, anything like that?
Of course. Yeah. So I'll even say that, like, I love sharing different perspectives, because I agree that, like, if you just kind of follow this one person, and if a lot of the stuff that you want to accomplish and they're already doing it, it's very out of line, out of scope, then, you might be a little, you might be under more pressure. So I really agree. Like, you want to diversify the information that you take in. You want to speak with different people, take in different content of individuals who are just getting into VC, people who have been in the industry for a while. I think all of it really helps. But specifically, like an interview that I think everybody should listen to is my interview with Megan Loist, founder of Gen Z VC. She is also, she works for Lear Hippo, an associate there. And what I love about Megan is, she did do the, what some might say traditional background, to get into venture capital, but she knew that, she was at disadvantage at the beginning, starting at the lowest point of the totem pole. So she had to build her own network. She had to really try and find ways to also build her own community, because she knew in day one that she wanted to be able to positively impact the lives of other young people getting into VC. So hearing her journey about not only taking on the responsibilities of Lear Hippo, which, that would keep you pretty busy, investing professionally, but also finding time to develop a strong community in Gen Z VC to help the younger future capital allocators. I think that for sure is a great interview that everybody should check out. Yeah,
I really like her. She is she's also just a great person to interview, like such good energy, like along with being like an incredible investor. She's just a nice person. She was on episode 1330 of OK Boomer. So skip to the end of the episode if people are interested in talking to her. Also, another person that was just amazing was on a segment with Jason. Yep. And she was in the latest whole segment that they do, talks about like up and coming angel investors. And Paige is just one of those people where hearing her talk, I'm like, you are so wise. I cannot believe you're my age. For people who don't know, Paige is another Gen Z VC. She also wrote a children's book. She actually is like a partner, created her own VC, and her book is called Seed to Harvest, along with her podcast. So definitely check that out. I'll plug her as well. She's killing it. Another person that is absolutely phenomenal at listening to and following on Twitter just to see how to break into VC is Nicole DiTomaso, I believe is her last name. She's from Harlem Capital. Harlem Capital rocks. Nicole rocks. And it's super awesome being able to see people our age killing it. Like, it's so cool. And one trap I think people do a lot early on is they only see successful people and the end goal, and they don't see like along the way path. So I think it's really good mentioning people like Paige, like Megan Loist, because just being able to see the path along the way is just as important as, being headstrong for that end goal.
It's crucial. And that's something I really realized day one that, yes, I wanted to have these successful people on my show, but I wanted to flip the script and talk about their 20s, because that's a time when they didn't necessarily have things figured out. And really, I agree with you 100%, Rachel. It's difficult to like see Elon's like, okay, like obviously he's killing it, doing amazing things, but how did he get there? Like, I want to hear of times of uncertainty, especially since we're dealing with a lot of uncertainty with the pandemic. So I think it's a fun time talking about the 20s.
Yeah, it is. And In Their 20s is such a cool podcast. What made you want to start a podcast with, it's obviously probably been really difficult to get these types of guests on. I can't even imagine what your outbound and rejection cycle was like, because you had some amazing guests, but I was like, dang, like it must have been really difficult to get some of these people. What made you want to start this podcast with, you've had like Steve Wozniak on, like that's kind of crazy.
Yeah.
Like, were you like, oh man, like I want to be like the biggest, the best podcast like this and get these stellar guests? Like, was that the goal?
So yes, one of my friends just asked me this like a few months ago. Day one, like I didn't know specifically who I would be getting on, but I knew like I wanted to obviously be speaking with the top of the top. But to anybody starting anything, doesn't have to be a podcast. Like, be humble enough to realize you're not going to have these people day one, day two. Hell, I mean, for the first few weeks and months sometimes. So I started with people in my network, people who I had worked with in college, professors that I had, people whom were influential to me. And that's another thing that because I interview influential people, it doesn't have to be necessarily just the billionaires. Like, I've always interviewed influential people to me. So people who have made an impact in my life. A few of my favorite episodes are like the early ones with professors that I've had and having an opportunity to reflect with them. But, you focus on solving a small problem for a small group of people first. So, we had our audience identified. We had the strategies that we put in place to get there with these, more local interviews. And we just continued to build a foundation. And I wish I could share some of the people that I've been rejected from, because those ones like also feel good. Like, oh, I got to know from this person. That's sick. But, we just kept building. And then we were able to get the Ev Williams and, the J Cals. And now that we have that fuel, we can get, the David Sachs and the Steve Wozniaks of the world and, keep going from there. But again, like, you got to prioritize the early days, focusing, being consistent. As you know, Rachel, is super important in building not just a podcast, but any form of content, because people need to see the foundation. They need to believe that you believe in what you're building, especially if you want to get these people on.
Totally. Consistency is so important. And I think that's a big thing that people don't talk about a lot in I would consider this it's the creative industry. You know what I mean? Podcasting is still like a creative thing that people are doing. And consistency, I find, is like totally overlooked. Like, there was this one point during the pandemic where I reached out to one person every single day for 100 days, not necessarily just for my podcast, but I was like, man, I realized like I just graduated. I was living at home with my parents and I was like, man, I'm not meeting like anybody in this adult world. Like, if you don't actually put yourself out there, you're not going to find anybody. And it wasn't till then, months into having my first podcast, might have even been a year at that point, that I get guests that were like, I consider big enough that they had their own presence so they could share the episode and that episode would do better from just me sharing it. Like, it wasn't just at that point people in my college community listening. And I think that like consistency just is so, so important. Do you have any advice for people that are trying to create a project like this to become better at consistency? Because I think that's a huge barrier.
Yes, I will say first off, make sure that you have a pipeline of content. Content can be very overwhelming, very stressful. And I've felt very unorganized a few weeks where I have other conflicts come up or like other responsibilities and I don't have time to build content. Content takes time. You can't just throw it together. So I, mentioned having like a drive of, I like to keep 3 to 4 interviews just ready to go at any time. And I use my free time, editing things that like may not be posted for a few weeks. And I'm glad that I do, because then I have, free time in the future to kind of focus on other things or other responsibilities. So that's been something since day one. Like I started this with my best friend, Michael, and we on day one, I believe it was March, we said we're going to launch a podcast, but we didn't end up making it public till like June, because within those months in between, we were just having interviews, we were building social content and making sure that we had things ready to go. So don't overwhelm yourself, just like try and have things in the back burner ready to go. I think that's super helpful with consistency. It doesn't have to be every Monday, but you do need to find a frequency that works for you, but more importantly, one that your audience can recognize. I know people that post, this day versus this week, and it's a little random. And, for an audience, it can be difficult to just understand, when an episode's coming out. That's simple. Yeah. So we do every Monday. At a time, we were doing every Monday and Wednesday, and I thought that the audience was a little confused. So we stopped doing that. So it's not that you have to do extra. I just think that you need to find a day that works for you to be consistent.
Totally. So I guess this gives a good time to ask like technical questions, because I don't know about you, but this like the next question I get after what is it like working for Jason all the time when people find out that I work with Jason is how do you start a podcast? I always tell people like some things that I absolutely love. Descript for editing has like been my lifesaver. Banking episodes has been a lifesaver. Having people that I know could be like consistent guests. For example, if like I do run out, I'll always have something in my brain being like this. Normally that's like a friend. And I'm like, you know what? This person always has some really good things to share with my community. Is there any other technical things technical pieces of advice that you would share with people that want to start a podcast that may just not be super evident? Like, buy a microphone.
Yeah, of course. I think audio quality is super, super important. I know Jason tweeted that like around when I was launching, and he kind of like gave his 10 steps like to launching one. And I think audio quality, like prioritize getting a good mic early. I waited a while.
Same.
And this is actually my friends that I'm using now who I started it with. So, you know, I wish I got one way sooner, but I just think I was so focused on like building the content and kind of putting that out there. But I mean, audio quality, you got to prioritize. As for programs, Audacity for editing, Riverside.fm recently raised.
I haven't used them yet. And now I'm like, I use Anchor. So I always do internal recordings like on QuickTime and things like that. And I'm like, Riverside, you know what? That seems a lot easier. And do you think, Jason, I think had a poll out recently, and most people in that poll, I believe, said they were at the time when I checked the poll, at least, said they listen to podcasts on YouTube. Do you think that it is needed to have your podcast on YouTube, or do you think that is a step people can step?
So yes, I think that's a crazy statistic that a lot of people in this space have been going crazy about. You know, from the audience perspective, most people are streaming their podcasts from YouTube. So not the Spotify's, not the Apples. I mean, well, they are, but the top numbers are YouTube. I personally believe it's important to diversify. So we're on every platform. I do like put extra emphasis on the audio platforms just because I enjoy, you know, editing the audio, and like, you know, I enjoy like the audience we've built, you know, on the Spotify's and Apples. And it is difficult, you know, to build something on YouTube. But I agree. I mean, you should at least have, you know, a presence on every platform. And I'd even go a step further, like really learn, if you want to be in the space, be fully in it. So that goes to like even using the call-ins and the social audios and the live podcasting apps, Twitter Spaces. Because, you know, I've acquired different, you know, listeners from unique platforms. You know, I would have never interviewed David Sachs, for example, as a guest if I was not on Colin. So I think that if you want to be a podcaster, like really get to know the audio space, because there's, you know, a lot of opportunities to distribute on different platforms, and at least, you know, have a presence on these unique platforms as well.
Totally. Landon and I were, for the audience to know, Landon and I literally had a phone call 1 or 2 weeks ago about how cool Twitter Spaces was. Like we literally were just geeking out over Twitter Spaces, being like, this is kind of crazy how much of an audience you get with Twitter Spaces, because it is so freaking hard to grow a podcast. Anybody can I really genuinely think anybody can start a podcast, like as long as you, like you said, have good audio quality, but actually growing that audience and building that community around podcasting. It's not as sexy as YouTubing, but I think that podcasting has a lot better longevity, in my opinion, than a lot of other platforms. So podcasting, definitely a form of expression that's here to stay for me. Do you have any advice? This is my last question, I promise. What is your advice on building community in podcasting?
That's a great question. So of course, being on these different platforms, I think is super important. But, you know, adding on to your point that you just mentioned, like I am very bullish on the longevity of building a podcast. And again, like I'll say it for the third time, it can get you, it can be a vehicle to get you into so many other opportunities, but you just got to stick with it. There's a famous stat out there that 90% of podcasters quit after episode 3. I agree, Rachel. It's not easy. It's not easy building an audience organically. It's not easy, you know, looking for sponsors as well. People think that like, you know, if they're only receiving X amount of listeners and downloads per episode, that, you know, the show sucks, but you gotta like just stick with it. It maybe took like 50 episodes for my audience to really start to understand, okay, so this is what he's trying to do. So that was 50 full weeks. And, but it was okay. It was a worthy investment because again, it's such a powerful medium. But as for building community, I think using Twitter is something that I use often, like just literally asking people who I know are, heavy listeners of my show, who've left ratings and, really vibe with the content I'm putting out, just asking for constructive criticism of how we can make it better, guests, suggestions. Those are ways to like build community on a simple level. Of course, like you can build an actual, Discord or Slack, a more intelligent community. But I think that starting out, just being able to listen to your audience, take feedback, take suggestions, read comments on socials everywhere. I mean, that can go a long way. And that's how I've made my show better. Not from me, from the community giving their suggestions.
Yeah, that's awesome. Thank you so much for coming on. I think these are really tangible things that are going to help people that are interested in starting their own podcast. I think a lot of our listeners obviously have been listening to Jason forever. We're over 1,400 episodes in, and Jason has a big name for himself. Obviously, so does Molly Wood, who is our other wonderful co-host. We didn't get to mention her on here, but plug in Molly Wood. She's phenomenal.
Of course.
And they already had a brand before coming to podcasting. So I really think that this is good information to share with people that are just starting out in the space. And I think it's important to share that podcasting isn't dead. People can still start and get big. Trust us. It's phenomenal. And I got my job through podcasting, I guess. Now I think about it. If I didn't have my podcast, exactly. I wouldn't have this job. So you know what? You're right. Open source. Awesome, Landon. Thank you so much for coming on.
Rachel, thank you so much.
Yeah.
My honor. Thank you.
Yeah. Where can people find you?
You can follow me at Landon20s. That's LANDON20S on Instagram, Twitter, Landon Campbell on LinkedIn, and of course, In Their 20s and Venturing in VC are my other two shows.
Phenomenal. Thanks, Landon.
See ya.
Hey everyone, producer Nick here. I want to tell you about the SaaS Syndicate. If you're a founder of a SaaS company with a product in market, our investment team wants to talk to you. Head over to thesyndicate.com/SaaS, SaaS, to apply to raise from the SaaS Syndicate. And you can join Jason's syndicate of over 9,000 accredited investors at thesyndicate.com.
Producer Justin here. Know a cool startup? Check out openscouting.com, where anyone can refer a startup to our investment team here at launch. Even if you don't know the founder, if you're the first to flag a company for us and we decide to invest, you'll get $5,000 in cash or 10% of our carry.
Hey everybody, producer Rachel here. Are you an early stage startup that has product in market, some traction, and are looking to raise at least $500,000? Apply today to Remote Demo Day for your chance to pitch to over 9,000 investors in Jason's syndicate. Submit your application at remotedemoday.com. Our next event is on April 27th.
And if you want to learn how to invest in startups from the world's greatest angel investor, and no, we're not talking about Chris Sacca, then head to angel.university to apply. The 4-hour workshop costs $300 and all proceeds are donated to charity. To date, we've donated over $175,000 to various charities, and you can see the full list at angel.university/charity.